Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have Ali Tajsekandar, the CEO of Wishpond Technologies. Wishpond trades on the TSX Venture Exchange under the symbol WISH. The company is trading at $1.76 with roughly 51 million shares outstanding, or about an $89 million market cap. I'd now like to hand it over to Paul Andriola.
Awesome. Great. Thanks, Trevor. Yeah, Ali, welcome today.
Thank you.
Thank you. Wishpond Technologies, you guys are relatively new. I see just listed in December of last year.
That's correct.
And we're happy to have you here and learn more about it. And I understand you're going to start us off with a presentation.
Yes, thank you very much. I'm very excited to be here and speaking with you and sharing our story and what we're up to. So yeah, let me share my screen and start here. So I'll quickly run through this and then we can, I guess, discuss a little bit about Wishpond. Wishpond is an all-in-one marketing platform, primarily for small businesses. So we bring all the key components, key technology tools that they need to be able to acquire customers online and generate sales through online channels in one single platform. We've been at this since 2009. We're a team of about 120 employees and contractors. 40 are full-time employees in Canada and 80 are full-time contractors dedicated to Wishpond around the world, generally in lower cost geographies. We've been historically growing at about 35% year over year, EBITDA positive. And this year, the analyst forecast is for us to grow at about 75%. And that's based on just the acquisitions that we've announced, as well as our own organic growth expectation. We're currently sitting on a cash balance of about $11 million as well, serving more than 2,000 small businesses. So a little bit about myself and the team. Obviously, I'm not going to go through everyone here as much as I might like to. But my background educationally is in computer science. I was involved in a number of technology startups back in the day and started Wishpond with my partner, Hussein Malik, back in 2009. And our focus since day one has been how can we actually help businesses, small businesses. Back then it was actually local retailers. Over time it expanded to be all small businesses, make the transition to digital and being able to actually get their customers where customers are spending time these days. At Wishpond, I wore many hats. So, from technology, I was the first developer in the company to, setting up our marketing team and setting up our sales teams and so forth. So it has changed as you might expect. Hussein Malik, my partner, he also is a serial entrepreneur. He started 2 companies and sold one of them to Lucent Technologies back in 2000. Olivier Vincent is another board member, again, serial tech entrepreneur. He started Can Pages, grew to about $100 million revenue, sold it to Yellow Pages, has been CEO and board member and, involved in a number of technology companies over the years as well, and a lot of expertise in small businesses and digital products as well. Arinder Mahal, another board member of ours, he has a lot of experience on the capital markets and public markets, Echelon, Dundee. Right now he sits on the board of Nano Explorer as well. So a lot of really interesting experiences all around. Another person, I guess, that I would just quickly mention, Juan Leal, he's our CFO. He joined us back, January of last year. He was VP in the corporate finance office at KPMG for a number of years, and his day job was basically M&A in both on the buy side and sell side. So that is very helpful for us now as well. So what is the high level problem that we see? The high level problem is that over the years, consumers have been shifting their focus to online, mobile, social. And as such, businesses also are trying to follow suit with that. And especially in the case of small business, have been very difficult for them because digital is actually complex. And these small businesses generally don't have enough financial resources or the know-how to make it work effectively. And then the choices that they would have would be either go to a marketing agency, and generally marketing agencies would charge $5,000 to $10,000 a month plus ad spend. And for most small businesses, that's just cost prohibitive. It's not going to work. And then the other option that they have is use a number of marketing technology tools that are out there, vast majority of them silo tools, and try to kind of integrate them together. And the problem is that still most of the time they don't get value out of them, because if you're not a marketing expert with years of experience in that, you're not going to get return on investment just having access to technology. So what we do at Wishpond, really there's three pillars to it. One, we bring and have developed the technology pieces that they need to do this effectively in one single all-in-one platform. Second component of it is we also give them marketing services and expertise help that they need to get the best chance of success. So anywhere from getting them account managers and copywriters and designers and ad specialists and all of those things. And the third component is making it affordable. So if they would have had to go to a marketing agency and pay $5,000 a month, now with Wishpond, they get all the technology pieces that they need, plus the services, and pay $500 a month. And we can still do all of that at 65–70% margin. So it works for everyone. And the technology pieces I'm talking about, these are not third-party components. These are actually developed. These are our intellectual property. So anywhere from using Wishpond to build their website, running marketing campaigns to attract new visitors, email marketing to engage those audiences, collecting payments we announced 2 days ago, customer management, portal analytics, and what have you. So it's a pretty complete suite that way. Some numbers to mention here. Some of them I've already mentioned. But I guess one that stands out here is we have more than 30 native software integrations with other platforms. The top one and the most important one perhaps is the one that we have with Shopify. So a lot of Shopify e-commerce merchants use Shopify to launch a e-commerce storefront, and just because you launch a storefront doesn't mean that you're going to get customers. You still need to actually attract those customers, and they use Wishpond for that. So for generating leads, because of that integration, there's full attribution. Everything that happens also on the Shopify side, all of those events are passed back to Wishpond. They can see the profile of all of those people. They can set up shopping cart abandonment, product recommendations, and a host of different things within Wishpond. We have more than 94% customer support satisfaction rating, close to 300,000 blog subscribers. And that one is significant because it just shows that over the years, we've invested a lot of time and effort and energy in building a very active inbound sales channel. So a lot of ebooks and infographics and blog posts and so forth, we're actually published as part of some of the marketing textbooks that are taught in universities in North America. And because of that, there's a lot of organic traffic that comes to us all the time. And in a future slide, I'll talk about our outbound sales model, which is actually even more scalable and more of what we're growing through. But it's good to have that inbound pretty much free coming to us all the time as well. So I think to put it in perspective and kind of be able to look at it from a customer point of view, this case study might be educational. One of our clients, Boo Foods, joined us back in 2016. They're a vegan protein bar company from San Diego. They sold through retail channels, and they sold also through their website directly. When they came to us, they wanted to grow that direct retail, direct website channel. They had about 6,500 email subscribers. Fast forward to now, we've helped them grow that 6,500 to about 150,000, grow their sales tremendously through their website, and get them really great ROI on the ad spend that they have. What are the things we did? We helped them with ad management. You can see on the right-hand side, this is an example of a monthly giveaway that is built using our drag and drop editor. All the tracking, all the segmentation, everything is using our platform, but we also help them with giving them design help and ad expertise as well. Everyone who comes into, let's say, for a chance to win a 6-month supply of their keto variety pack, enters their contact information, then they're put on email drip campaigns. Again, that's another component of what Wishpond does. We also help them generate more leads from the traffic that they're already getting on their website by using our pop-up tools, forms, different call to action buttons, and through all of those, they've done quite well and have been growing solid, and we're very excited about that. In terms of the customer base, you know, as I mentioned, small businesses are our bread and butter, they're our focus. But over the years, we've also worked with a number of Fortune 500 companies. In terms of revenue mix, there's still a small percentage of our revenue. But what is significant about this is that, you know, we're working with them, we've learned what really it takes to be successful online. And whether you're small or large, you're gonna compete for the same you know, interest from the consumer. So, you know, there's certain level of expectation that consumers have. And what we've learned through working with the larger guys, we've been able to actually bring and, you know, and make available to small players as well. You know, as an example, when Activision has a new game of Call of Duty and they launch a campaign and millions of their fans come on the platform for, let's say, contest or giveaway or something, the platform scales well, is secure, is high quality, and you know, if it works well for them, it definitely works well for smaller companies as well. Majority of our customers are from United States, 68%, then 14% from Canada, and then the rest is around the world. Brazil and Europe are top ones there. E-commerce is a top industry vertical for us and is the fastest growing one, especially through COVID. They've done well, and we've also doubled down on that industry. And then after that is agencies using us on behalf of their clients, and then is a wide you know, spectrum of different industries. One of the things that is very key about Wishpond and kind of has really helped us grow is this predictable sales engine that we've you know, developed. So you know, last year, for example, we had about 12 account executives in our outbound team, and you know, another, I don't know, 14 probably SDRs who are kind of doing the appointment setting and then lead generators and all that. This year, the plan is to double that, and next year to pretty much double that again. And this, our outbound sales is such that $1 investment in it gives us $3.50 return. So it works really well. That LTV to CAC ratio is very, very solid. It's, you know, top percentile there. And we have specializations. We have people who are just specialized in generating leads. They have their own targets, you know, incentives and so forth. We have SDRs. These are the appointment setters. They're doing the first leg of the outreach, and then the account executives who are the quota carrying salespeople who are, you know, engaging with the customer from the time of demo to closing. And all of them have their own onboarding, training, you know, conversion targets, and all of that. And because of that, as we expand, we very predictably and very quickly see our numbers go up. Our business model is that vast majority of our revenue is subscription-based recurring revenue. We have two different buckets for our subscriptions. One is those who are using completely self-serve, just want to use the technology themselves. Maybe they're the marketing person in a company, they already know exactly how to get success from the tools. And those would be the price points that you see on the bottom, anywhere from $75 to $250. It goes up based on number of leads, but that's kind of the bulk of it. And then there's another category, business owners that are busy or they're not tech savvy and they want us to actually play a more active role. That would be our fully managed campaigns and fully managed subscription that starts from $500 US per month and goes up. You know, majority of these are 12-month contracts that renew automatically as well. And as I mentioned earlier, gross margins are consistently of 65 to 70%. In terms of financials, you know, as I mentioned, have been growing at about 35% 35% year over year. The analyst forecast for 2020, the 2020 financials are not out yet. They should be coming within the next month, obviously. But analyst forecast is 7.8 million, and analyst forecast for this year conservatively is 13.9 million. So you can see actually that is accelerating quite a bit, and next year 17.6 million. And here the assumptions by the analysts are that if Wishpond just continues growing at that same 35%, which realistically now with more investment in sales and all that is expected to accelerate, plus the 2 acquisitions we've already announced, this should be the trajectory. So this doesn't take into account that now we have money for more acquisitions and money for faster growth. 2019 was the first year that we were EBITDA positive. 2020, the expectation is that we're going to be $400,000 EBITDA positive. Q3 already is announced. Q3 alone was already $400,000 positive EBITDA. So that is definitely a very solid expectation and conservative one. And we expect to continue growing profitably in the coming years as well. So projected 78% revenue growth and 225% EBITDA growth in 2021. I think we can skip this one. Actually, sorry, correction. Q3 EBITDA was 180,000, not 400. First 3 quarters was already 400,000. Just want to make sure I'm being accurate about that. So we've done 1 acquisition and announced the LOI for the second one. We're in the process of closing the second one. I'll quickly talk about both of them. First acquisition we did was Invigo Media, is a marketing technology and services company that is focused on healthcare, primarily in US, a run rate of about $2.7 million with 20% EBITDA margins. And we acquired the company at pretty much about $3 million. That's the expected payment. And what is very exciting about it is that it opens a new vertical to us in the healthcare, channel or vertical. Also, the technology, Evergenius is the name of the technology company that they have and we acquired. It gives us, CRM functionality, mobile marketing, SMS, two-way communication, reputation management, social media management, sales funnel. So a lot of really great things that we're going to integrate into Wishpond and have it all under the same umbrella. So it just increases even the value of that all-in-one even further. PersistIQ is the second acquisition that we announced. Any day now, we should close it. And this one is a sales automation software platform. So primarily used by sales teams or realtors or, financial advisors, those kinds that need a platform for sending sales emails or, personal looking but automated emails, track the open rate and click rate and all of those things. Again, a profitable company, run rate of about 1.1 million US or 1.4 million Canadian, 20% EBITDA margin. And it's another functionality that is quite useful and complementary to Wishpond. A lot of our clients have already been asking. And in fact, PersistIQ was a software that for a few years we were a client of them. So when we saw that there was an opportunity, we were very excited. We already trusted their platform. And right now we're actually using them again, obviously, not just because we're in the process of owning them, but because it's actually one of the best ones we've seen. And we've used a few. In terms of share price, December 11th, when we listed, the list price was 75 cents per share. Fast forward to now, I don't know what it is right now, but at the beginning of this conversation, I think it was $1.76. So, we've seen a great lift from that. And, with, the enterprise value, when you decrease the cash from it, and I think some of these numbers are actually a little bit outdated. The cash is not 5.5 million, it's actually 11 million. You'll see that let's say 89 million minus the 11 million, we're already talking about 78 million enterprise value. And compared to the comparables, there's still a lot of value. And the analyst consensus target price for the next 12 months is $3.50. So that's everything I wanted to share with you. Just the highlights are fast-growing, profitable company, scalable. There are millions of small businesses around the world that need our technology and services, and we have a proven, scalable, and profitable way of reaching them through our sales channel. Again, proven team. We already are serving more than 2,000 customers. Actually, if you add the PersistIQ ones and Invigo, more than 3,000, I could say, all in one, technology enabled. A lot of people at the management table that have proven track record in the marketing software industry, and a lot of growth ahead of us through expanding on sales, but as well as growing inorganically through acquisitions. And the money we've raised and we have available, because we're profitable, we don't expect it to go into supporting our operations. All of it is basically put aside for growth. So that's everything I want to cover.
Ali, is a fantastic job, and you make my life hard and easy at the same time, because I think we got most of the information, but now I've got to make sure I ask some intelligent questions, which can be a bit of a challenge. One thing you didn't mention was competitors. Give us a sense of what the competitive landscape is for you guys.
That's a great question, Paul. In fact, that's actually one of the slides that we usually have. I think for benefit of time, we took it out. Just wanted to be mindful of the time we have. But yeah, the competitive landscape is that, you know, there are a lot of silo players. So you have, you know, Onbounce, let's say, as a landing page company, and then you have, you know, MailChimp for email marketing, and then you have some company for marketing automation, another one for CRM, and so forth. And really the key with Wishpond is that, as opposed to getting multiple of these, and especially if you're a business owner who is busy running your business and marketing is not your, you know, your focus, then you don't want to go and get a whole bunch of subscriptions, pay different subscription fees, somehow integrate them and make sense of different data with different angles on them. So all-in-one is a big part of it. The second component that it actually sets us apart quite a bit is that we add the services and expertise side to it as well. Very few of our competitors, even the ones who are more in the all-in-one, such as HubSpot, would provide the services to make you successful, right? So that is quite unique. And then the third component that I mentioned is, and we do it for the prices that make sense for small businesses, right? So those three really set us apart.
I love it when I talk to founders such as yourself. How did you come up with the idea, and like what got you started on this business opportunity?
Yeah, I wish I had a crisp answer to that. Unfortunately, I mean, you know, started the company in 2009, so it wasn't like, oh, brilliant idea, exactly what we are right now. We started 2009. That didn't happen. So when we started, actually, it was a local product search engine, meaning that we were helping local retailers put their inventory online. And the name Wishpond comes from, you as a consumer would be able to go find a product and make a wish that I see is listed for $200. All I'm willing to pay for it is $150. So you were making a bid, what we called wish. And that wish would be distributed to other local retailers to come in and say, yeah, I take it or not. So that's where we started, and that's where the name comes from. And then over time, there were a lot of difficulties with that. You know, attribution was difficult. We were sending customers, and the loop wasn't closed. Data accuracy was a problem. You know, you find this product online, you go to the store, and it's actually not available. All of those things. But working with them, we realized, you know what, where we can actually help them is put their product on Facebook. Okay, we did that. Facebook storefront was one of the products we did. Now that they have it, no one is visiting. We need to actually build some contests and different engagement tools. We did that. Okay, actually contests, you know, is great, but they want, you know, something more ongoing, like a landing page as well, built landing pages. That's also great. You have the leads, unless you actually nurture them with something like email marketing and marketing automation. you're not going to get the full value out of them. So we developed that. So it was gradual as opposed to, and as we were working with our clients, as well as our own needs, we were discovering, okay, this is what makes sense. And they expanded on that and they traded on it.
Fantastic. So you've done a couple acquisitions now. Explain to me what you guys look for in your acquisition. Are you looking for sort of client relationships that are already established? Are you looking for new technologies that can sort of increase your wallet share? What do you look for in your acquisitions?
Yeah, great question. And I think actually the answers that you mentioned or guessed that are accurate. So really there are two buckets for our acquisitions. On one side, marketing and sales technology companies, and on the other one, marketing agencies and services companies. So on the technology companies, it would be those that have components and technology that we don't have, or they have better depth at it than we do, and it would be complementary. Our customers are already asking for it. It would be helpful that way. And we still, we pride ourselves in being financially astute and, cautious, I guess. And because of that, even on the technology side, we want to acquire as much as possible companies that are profitable or at least break even. Which is a little bit harder these days with technology companies. And on the other side of it would be marketing services companies, so agencies that we can actually bring their customers on board. We can, move them from being a services revenue and customer to being a technology customer by embracing and using our technology, make them, also stickier, and by providing them more value and kind of using that back end. Financially, it also makes sense for us because, as we make that transition, that revenue becomes a more valuable and more sticky revenue.
You mentioned, and I noticed you guys closed an $8 million bought deal financing a little while ago. So obviously you've got some cash. If you're sort of break even or even a positive, like you said, you don't need the cash for operations. It gives a better sense of where you think you're going to spend the money. If you're going to do some M&A, I can appreciate that's probably something's going to go there. But how much are you going to allocate to increased marketing? How much are you going to allocate to any other needs that you have?
Absolutely. So I would say three areas. One area is expanding our sales because, as I mentioned, is actually one that is proven. We know by growing it, our organic revenue will grow. So that's one area that it goes into. Another one is expanding on our product development. Now with more access to capital, we can actually accelerate some of the things we want to do. And with the acquisitions also, now we want to integrate those functionalities within Wishpond faster. So need more, skill set and manpower there. And the third one is acquisitions. Bulk of the money we have raised, we expect actually to go into acquisitions. The acquisition money is actually in a different bank account, all the money we've raised actually is in a different bank account. We haven't touched it even for growing our sales and product development because we're also generating our own growth from our own revenue growth. So far, all of that has come from our own. So majority of the money, if not all of it, will go into acquisitions.
Fantastic.
And the other thing also, Paul, to mention also is that because the companies we're acquiring are also positive and profitable, they also end up bringing more to the table and allowing us to grow faster.
Fantastic. Let's talk a bit about your customer or an average customer. I imagine if you're dealing with small customers, they're not exactly computer savvy. What's the work involved in getting them onboarded? Is it fairly automated? Is it, do you have to do a lot of hand holding? Just give us a sense of that.
Yeah, so as I mentioned, we have different ones. So the ones who are savvy are generally the inbound traffic that we're getting. They find us online through review sites or different blog posts and so forth. Those are the ones who just sign up, use the platform. They know what to do with it. But I think the majority of the growth is coming from where I think you were alluding to, which is small business owner who's not tech savvy. And even if they were tech savvy, they're busy running a business, right? And they rather spend their time with their customers or patients in the case of healthcare, or, you know, all of those things. Right. You know, in terms of sweet spot, I would say is companies with 5 to 20 employees. We have those smaller and solopreneurs for sure, but you know, 5 to 20 is more of the sweet spot. That it's a more or less established company. Is, you know, it's really they have their own product market fit of some sort, but not large enough that they would have their own dedicated marketing resources and marketing people and marketing department, right? So that's kind of where it's at. And then in terms of onboarding them, it's quite streamlined, and we've had to streamline, bring technology into it, bring packages and different systems, so that, you know, when I say 65–70% margin, it can only be achieved if you've done that, right? And generally from the time, our sales cycle is about 3–4 weeks, which is super fast as well. But from the time that they're closed and they start with us, it takes 2–3 weeks to launch their first marketing initiative as well. Relatively fast.
And do you, are you guys able to model sort of the returns that some of these customers are getting? What sort of ROI can a customer of yours expect?
I think it's difficult to give a specific number. There are a lot of case studies on our website that I can refer you to, or the BooFus that I talked about. But it's really different from one case to another, right? You know, we have cases, you know, like a construction development company that joined us, Act Construction, and in the first 3 months, paying very little, actually about $2,000 a month with the ad spend and all that, brought $80,000 of new projects for themselves. So you have that, but then on the other hand, you have those that return on investment is on the lower side of it, because a lot of times the return is dependent on their business, the product that they're selling, the market they're going after. But what I actually tell our salespeople also, which is important, you know, not to promise something that, you know, that is the same for everyone. It's not doable. But I think what we can promise them is that if we can't do it, I have a hard time imagining who can, for these prices and for what we're putting in and the technology we're giving you. So really, I'd like to think we're the best shot they have.
Yeah, awesome. And do you guys, I imagine you guys have an estimate of what lifetime value of a typical customer is. What kind of numbers do you see around that?
Yeah, I think the latest number is about $3,500 US, something like that.
Okay. And give us a sense of your customer acquisition costs.
About $1,000.
Okay. Okay. Yeah. Good.
Yeah.
Okay. Well, let's take some questions from the audience. I've actually stolen a couple questions from them already, but
smart audience.
So we've already touched on this. What kind of acquisitions are you looking for and why? You explain that. That's fine. Listen, how many? We always ask the shareholder concentration or insider ownership of the stock. Give us a sense of the breakdown there.
Yeah, I think insider ownership is about, if I'm not mistaken, about 47%. And it might be another 10%, slightly less than 10%, spouse of another insider. So, the largest shareholders in Wishpond are myself and my spouse, and my partner Hossein Malik and his spouse. And to me, that's quite important, because it also goes to show that we're not gonna do things that are reckless. We're the largest shareholders. Our interests and the rest of our shareholders are completely aligned.
Always a good sign to see the CEO own a lot of stock. Absolutely. Yeah. Any warrants, options? What's outstanding as far as warrants and options?
I think there are some broker warrants as part of the raise, but let me clarify, it's very small. So as part of the initial raise and the bought deal, we did not have any warrants or half warrants or anything like that. So it was very clean. Mm-hmm. And that's obviously, as you know, important because it also means that there's less downward pressure of people selling and just holding on to the warrant. Yeah. It would be a little bit of, broker warrants that, as part of the raise, 7-8% sometimes that they get. Mm-hmm. But that's about it. And options is slightly larger, I think probably 6-7% option pool that we have. That is for employees and management and, making sure that people are incentivized the right way.
Yeah, no, good. You're a rapidly growing company. You're in the tech space. We hear all the time that there's a shortage of good skilled, software engineers and programmers and everything. What's the missing piece of your business right now? What are you looking to shore up as much as possible?
Definitely access to good developers is difficult. That is one of the ones that even when you have enough money in the bank is difficult because everyone wants them. We are now expanding our talent pool to be wherever they are. Before in the Vancouver head office that we had, we were very focused on getting people there. Now it's not the case anymore. I haven't actually been at the office. Most people haven't been at the office for the past many months since March. We don't plan to really have a permanent office anymore when the lease expires end of the year, which by the way is going to save us about $500,000 a year. So that's good, but also it opens the possibility of getting good talent everywhere. And we're working with good recruiters, good people on the recruitment side and HR to help us on that. But that is definitely a challenge.
Mm-hmm. What are the general trends you're seeing in your industry? Obviously, there's a lot more online commerce. There's a lot more emphasis on streamlining or even starting a new business from scratch. Any other trends that you're seeing that are really helping your business?
Definitely one of the biggest trends that's going on right now and is helping, I would say two trends. One of them is e-commerce as a whole has been getting a huge lift from everything going on in the world with COVID throughout the last year and even now. And a lot more people and companies are getting into e-commerce. So that's one. The other trend that we also see is that more and more businesses are taking online more seriously as a matter of necessity. So they might not be e-commerce, but maybe they were a fitness center who now have to have classes online. Maybe it was a spa that now has to do some makeup classes online. Teacher who's my son 4.5-year-old is going into classes on Zoom. So more and more businesses that were traditional businesses are now becoming online businesses, and that is exciting in terms of the convenience of it for the consumers, but it's also exciting for us because we're at a place that we can help them and we can innovate there, and that's fun.
Mm-hmm. Now, investors, as they watch your company, what do you think are the key metrics they should be really watching for to understand the direction of business?
I think like most businesses, if you want to look at it the right way, you should look at revenue. Where's the revenue and where's EBITDA at? I think that will tell you most of what you need to know, and whether it's accelerating or decelerating. I think keeping an eye on that is quite important. In terms of also, things to watch for in terms of what we're doing, and noteworthy news, acquisitions are going to be a huge part of it as well. So product announcement and acquisitions, I would say, are important for us.
Mm-hmm. I think you're one of the more rare companies that we find that you're actually a SaaS-based business where you're break even or making money
or make any money. I got to tell you, Paul, every once in a while, I shouldn't, but every once in a while I go on some of the forums just to see what people are saying. By the way, we have a policy that we don't ever respond to anything on these forums, just to be clear. Yeah. But And I see a lot of times people comment on, oh, this is a hidden gem and this and that, and they actually make money. To me, it's surprising how surprising that is.
Me too. I completely agree.
Yeah.
But we've seen so many investors sort of get, well, I mean, they're starting to understand that you guys are investing. I mean, it's $1,000 to acquire a customer, the lifetime value, you know, $3,500. So obviously, as long as you're gaining customers, you're going to keep making that spend. Obviously, some companies will sort of technically be losing money as they're building up their client base. But you guys, you know, fortunately, you're a step ahead. You're making money while you're continuing to do that. So congratulations on that. I mean, you've done a fantastic job. Like I said, you made my job easy and hard at the same time here. But is there a key message, sort of anything that you think that an investor that's relatively new to Wishpond should leave this presentation with that that would, you know, really capture what you guys are all about?
I think it goes back to what I mentioned before, and sometimes we go through them and gloss over them rather quickly. So I'll repeat that, which is really there are millions of small businesses. Vast majority of these small businesses, when we reach out to them through outbound sales or something, they're not even comparing us against any other technology providers. They're really not attractive to a lot of our competitors. And to me, that is interesting. It's a market that is open for the taking, and we can help them. And we have a scalable and profitable way of reaching them. And I think Wishpond, we are a long-term focused company. We're here to grow this solid way. We're not going to be a company that every few days is going to have a news release that is frivolous. You know, so I think our investors should be the type that really want to invest, not just speculate. If that's the right fit for them, you know, we're focused on building value long term.
Fantastic. So Wishpond, a relatively rapidly growing SaaS-based business that actually makes money. I'm so happy. I'm so happy we've managed to capture one of these in an interview. Ali, if somebody wants more information, what's the website address?
Wishpond.com, www.wishpond.com. And I think wishpond.com, on the header, there's an investors link as well. Mm-hmm. You can go there to download fact sheet or get on our newsletter and learn about anything coming out as well.
Perfect, perfect. Listen, Ali, thank you so much for joining us today. And
my pleasure.
We look forward to catching up at a later date and keeping updated. Appreciate it.
Absolutely. Thank you very much.
Thank you.